Hello everyone and welcome to the US session brief. We're on Friday the 5th of May 2023. Just gone past 2:30 here in Europe. That means just gone past 8:30 a.m. in New York. So Eastern Standard Time 8:30. That means we've just had the US jobs report released. I've posted the numbers immediately inside the trading chat. Everything's come through pretty hot. It must be said. That's both NFPs, significant beat. Average hourly earnings also beat, and unemployment rate has gone down by 2 basis points to 3.4% versus an expected 3.6%. So it's pretty much a blowout US jobs report. NFP blasting through consensus for 13th straight beat. Unemployment falling and earnings growth coming in at a pretty sizzling 0.5%. So it's left a few people now thinking, okay, what about that pause from the Fed? Hawkish initial market reaction, it must be said. We've seen some flow immediately into the US dollar. So both the cable and the euro fading, the cable fading some of its previous gains. Dollar yen seems some movement to the upside, and you can see gold just coming off that 2040 level. Bear in mind, this is the fast money. Algo's reacting pretty quickly. The real money will start to pour in after. So we'll see how it settles. But right now, a relatively hawkish looking report and data, that is. Of course, Fed still said they are data dependent, but markets had been pricing in that rate hikes were done, and it's going to be interesting. The market is now seeing approximately 79 basis points of Fed cuts by the end of the year. It was 85 basis points pre-release, so not too much of a move. So what does that all mean? I mean, the US jobs market is pretty hot. There's no other way to describe it. Obviously, there have been warning signs in a few of the other indicators for a softening economy, but the jobs market is certainly not showing signs. And at 3.4% unemployment, it is cooking. Other news that we had over the past 24 hours is Apple's earnings. While the company didn't talk much about AI on their earnings call, they did deliver an average quarter. And in this market, average is good. They beat on both top and bottom line, although estimates were low. Year on year, their EPS came in flat at $1.52. But revenues were down 2.5% year on year. But iPhone revenues same the day, coming in at 1.5% gain year on year. Asia and Europe saw an uptick in revenues, while the Americas saw a decline on missing estimates. The market received Apple's earnings pretty well, and US equities have been trading higher this morning. Remember, it was after hours, so you saw firstly a bounce higher in the after hours, and then you've seen that follow through into today. Yields were also, I just mentioned the yield, sorry, and then we've got oil as well, also just ticking a little bit higher. Gold just moving lower on the back of that report that we just discussed. Quick wrap up of the day. Asia equities ended mixed. Directional days trading. Hang Seng closed higher for the day and the week. RBA forecast inflation still not expected to return to the upper end of 2 to 3% target until mid-2025. The ECB raised 25 basis points yesterday, but didn't talk about pausing at all. Quite the opposite, in fact. They discussed further rate increases. So it was a dovish hike, the initial one, but then Lagarde came out with a very hawkish tone in her presser. UBS is considering retaining Credit Suisse's investment banking unit, selling the rest. PacWest, First Horizon and Western Alliance led a renewed slide in US regional lenders as sentiment disconnects from fundamentals. The KRE regional banking index is seeing a marginal reprieve pre-market today, but doubt that these banks are out of the woods, it must be said. Microsoft is working with AMD on expansion into AI processors. There's a few other stock related news, but nothing major that I want to discuss and focus on today, so I think I'll leave it there and we'll go into markets. So like I said, US dollar is heading high, and I just want to talk about this dollar yen specifically for a second, because in this entire move higher, prior to the reversal, what we were potentially discussing is, well, firstly watching the 200-day moving average. We burst through that, but then we had a second round of resistance at that 137.70 level, and that proved too strong, and then we saw quite a significant knockback off there. We closed back within the previous bar, didn't break the low, but then on the breakout of the previous few days, That was given enough reason, and there was a move exasperated further. So this was a textbook fade of that weakness in the yen that we saw on Friday on the back of the BOJ presser. Completely faded back lower off a technical level. Pretty much perfection there for as far as fades and reversal trades go, and then moved back down into one of our key technical levels. In fact, yesterday, and finding some support at 1335. Oil is looking to do its own fade, have a fade of its own. As you can see, that sell-off last week, or sorry, no, that was this week. We're seeing quite a firm bounce since that 65.55 level was hit, just below that actually. Gold pushing lower as we speak. You can see here getting sold off quite aggressively now, and we could actually end the week back where we started it, believe it or not. Despite a huge move to this 2075 all-time high this week. S&P is still holding up, isn't it? Despite everything that's going on, despite regional banks under stress, despite the Fed hiking again, etc., etc., despite softening US economy, we're still holding up. Is that a good sign? Relatively unpopular opinion, possibly, but the fact that we are still here on the SPX, given all the stuff that has happened, is pretty bullish. Will we be seeing 5,000, which is my call, which is up past the highs from last year, will be a new all-time high. We'll be seeing 5,000 before we see again a retest of these lows. That's the question that I'm raising today. So, of course, we've got to get through this initial area of resistance that's 41.65, but I'm quite impressed with how we're holding up here. And I know some of the big tech has been doing some heavy lifting. But still, just the fact that we are holding onto these areas here and we are trading near these new yearly highs, despite some downside volatility this week, we keep finding support and we keep trading at these levels, and I'm finding that as a bullish. I'm finding that to be pretty bullish. So that leaves me to wrap up the US brief today. I'll see you all inside the chat room. Thanks for listening, and all the best of you trading.